Hey, Julie, you have to invest longer term, right? So how do you so how does globalization impact? Where are we in that?
Well, I think right now, globalization or deglobalization really is a great talking point for a lot of politicians. And we've seen the challenges of our hyperglobalization in the sense that our supply chains are very rigid and they're built for being low cost, but they're not necessarily built for flexibility. And we've seen the downsides of that. But being able to wholesale move and re-onshore is a really challenging, slow process. And the thing is there are reasons why globalization happens, right? Some countries are better at producing certain things, right? I am not buying my romance novels from Germany, right? But I love their cars. So it's just a function of being able to amass the right quantities of inventory in places where it makes the most sense. So I think longer term, we'll see some movement to onshore where it makes sense, high value goods. You see semiconductors coming back to the US. But generally speaking, I don't think there's going to be a wholesale change.
I'm genuinely just Googling German romantic novels now. There are a few out there.
They're probably a little depressing, but you know.
Well, no, I haven't read them. Certainly not in German. So I'll park that one. But they do exist, is my point, is what I'm trying to say. Julie, the point about deglobalization is, though, that it is likely to be inflationary. If you talk about kind of comparative advantage, that comparative advantage leads to lower cost and therefore lower inflation rates going forward. If we reverse that, it's going to mean higher inflation. That's what Stiglitz is talking about in Davos. He's talking about the fact that we're trying to fight the war the wrong way right now. We have a supply side problem, but the Fed's raising rates. The two don't compute. The two don't go together. So if we're using the wrong tools right now, what is going to be the implication of that?
Well, I think right now inflation is a near-term problem, right? And being able to completely wholesale re-onshore your supply, that's a multi-year process, right? Intel's fab in the US is going to take years to build, right? So I think the talk of deglobalization is really more so a political point of we need to move to be more flexible and have more good jobs onshore, right? But the real fight with inflation is happening kind of at the monetary level. And it's not so much about where we are in deglobalization. I don't actually think they're that super related because their time horizons are so different.
Well, it's a fair point. Also, if we got immediate relief, would companies just use that to help their margins and not necessarily pass that on to their consumers, for likes of Target and Walmart? So,
Exactly.
so with that in mind, and we look at a market that had a really terrible 7 weeks, particularly last week on that Thursday was really brutal, and then today we're up by 0.7%. And I just wonder, is the worst over, or are we going to be in a no man's land?
Well, I think the level of volatility indicates that we're still probably not settled into a bottom, right? I mean, this is probably one of the most emotional markets we've seen in a long time. I mean, it's worse than my 4-year-old toddler. I mean, it's just all over the place. And, if you think about what we're doing, right, every day we're trying to price companies, right? These companies' fundamentals are not moving 20 to 30% in the span of months, right? So that really indicates that this is about investor emotion, investor spirits. And when we have this level of volatility, we're not going to get to a place where we really are genuinely completely oversold, right? We have to exhaust. Everyone has to say, I am done with this market. And we're not there yet because we're seeing so much money kind of flow back in when we get these like nice short little rallies. And I just don't think we're quite there yet.
Julie, you do a lot of granular work on companies. What are you getting from those companies and the research you're doing in terms of where we are with the consumer? I've listened to a number of people in Davos today, particularly from the banking world, talking about the fact that the consumer is still in great shape, which kind of goes contrary to some of the data we've seen lately. What is your sense of where we are? Because if the consumer's still in great shape, then we've still got a way to go with this.
I think that's absolutely right. I think if you have a strong consumer, the economy can really chug along for a good long time. The sentiment is really bad, but generally speaking, sentiment isn't always the best indicator of the consumer's health. But I do think at a certain point, these gas prices start to be really meaningful. We're starting to have to go back into work, whether we like it or not. And I think generally speaking, with all the bad news about inflation, that really causes people to reevaluate how they're spending their money. So I think we'll have a nice boost of people just traveling because they have so much cabin fever over the summer. And then we will really have a retrenchment. And I think you could see very soft back to school numbers. I think you could see a tough holiday season. And that would be really difficult for a lot of the US economy to shoulder.